Okay, week commencing 10th of June. Um, Inshallah, I hope this is actually a better month, better week, sorry. With the NFP behind us, we should now be able to move a little bit more, should have a bit more freedom now in terms of price moves than we've seen in the last 3 weeks. As you can see, it was just mainly range bound. So last analysis, ideally I was analyzing this, act as a weekly high basically, and then we go lower into this. But then I also stated we could very opposite and not do that and just do completely opposite and actually head down first, which is what we did, as expected on an NFP where it's likely to not follow the ideal scenario. And it even, took out this previous weekly low. Now, what do we have? So we chilled out here, we went down, whole week in this range and then exploded higher. Now, overall, gun to my head again, because nothing is clear to be honest, I'll be very honest about that. Getting to that scenario, I think right now that I'm looking for is that we're still. I think this can still very easily head down. Yeah, we did have a close above the weekly, the monthly consequence of encroachment. Flash the weekly for rally gap, really strongly rejecting that. But this is one of those weeks where it's just not clear. It's just a lot of wait and see. Not to mention the economic calendar actually, which I should actually show first. Let me just get that loaded up. So we don't really have anything on first 2 days of the week. Nothing major apart from the note auction. But the big news event is the CPI FOMC projections interest conference Wednesday. That makes that the ideal candidate for the opposite end of the weekly range to be made. And then you have some easy sessions Thursday, Friday. I think fundamentally with the news drivers, it's going to be hopefully an easy week. Now, but again, Friday, we're going to have to wait for Wednesday, I think, to get clarity. That's why I don't think it's clear at the moment. But if it is going to go to this basically, then I think there's a really high chance we can do it this week. In which case, I will then look for a discount open, mainly inside the SIBI. I don't really want to see anything closing below the order block here, or even taking this out. Okay, maybe a raid, but nothing closing on body basis. I don't want to see anything, below these lows here on the weekly and the on the weekly chart and the daily. Okay, if we're gonna go up, what if we're not? What if we're just gonna come down? Well, then we can have a very easy open where it starts to go in premium, fills this, takes this out, maybe even this, and then here we start building our weekly high counterparty and then drop into this that I highlighted before, this BISI. Okay, so we can go up to go down if we do that. Again, highly speculative because anything would happen. Wednesday could completely change the entire direction because it's not clear at the moment. It's range bound mainly. Okay, but if we're gonna go up, I don't really want to see it here. Below this, maybe a dip below is fine, but nothing on body basis. Roughly in this area, weekly low, and then up we go. So I'm gonna make it nice and quick. We don't need to spend too much time on it again. That's the beauty of the scout model I'm trying to use now. Basically, nothing is changing. I'm still looking for my weekly draw, and then higher time frame levels. I'm still plotting them on my chart. I'm still looking at my intraday, uh, you know, charts, how they're behaving in relation to the higher time frame levels, and how the sessions are opening and closing, and how they're pricing to a premium or a discount PD array. And then based on that, I'm taking my trade like I would anyway. The only difference is instead of entering before the reversal happens, I actually wait for the reaction from a key level. And then once I get that reaction and I get that 5 minutes market structure shift inside a relevant time frame, not time frame as in 1 to 3 minutes or 4 hours, time as in time of the day basically, such as London, New York session or a silver bullet. Once I have the time element line up with the price element, i.e. the key level, 5 minutes market structure shift, potentially even a case where people have been caught offside, actually myself included, I might have been trying to go that direction and I've been caught offside. Bonus. That is one of the easiest directions you can trade. Yeah, of course, when it's not FOMC, because then it can easily go into a chop or any other major news driver. Where before that, it might go into a chop. other than those conditions, it's really easy. Basically, in those conditions, really low resistance liquidity run. So that's basically what I'm doing. 2 hour risk reward, easy. If you hit that, in your first trade, guess what? It's a done deal. You can finish. You can close the chart. Hit that a couple of times or 3 times in the day, you can just call it a week basically, and just stop trading for the week. Now, last week I think we fared pretty well. I think personally, you know, imagine only losing like we didn't actually lose much. We managed to recover, so that's a bonus. But the key things I want to focus on is risk management again. It's your risk management that will ultimately get you to start winning. Because if you don't control your losing, you'll go down real fast and blow the account. But if you can just hold out and not blow up, you will eventually start to succeed. The reflection we did, I think that is extremely valuable. The points that I've noted, which I really want to quickly go through. Psychological control. So from Tuesday, I learned is that 2 entries per session maximum is reasonable. Okay. Yeah, if it's FOMC, I'd probably sorry, if it's like FOMC, NFP, big news event, manual intervention, try to like dial down the entries or at least the risk. Take some kind of preemptive move basically to be cautious, okay? Because you don't know how it's gonna price. Because there could be manual intervention, okay? Because if you can just do that, that will save you mental capital. If you have mental capital, you can make all the money in the world. But if you don't have that, then it's going to be easy for you to see and trust the objective elements within price action to take a trade. So very important there. For breakout entries, again, where you need to be real quick, this often happens when traders have been caught offside and then it's reversing. It's going to be real quick. It's not going to give them time to mitigate their loss, okay? Myself included, sometimes I might be long and, it just breaks down towards a discount, fair value gap. I'm like, yep, okay, long strapped. You got to be quick with that one. Quick doesn't necessarily mean a bad stop management. That still has to be right. You may need to even dial down the lot size because of that. Or even the risk reward, sometimes it might be moved a little bit further. You might have to just accept the lower risk reward. You can then say, okay, I'm just going to put the TP lower. You can't, as long as the price does not allow you. Obviously, if there is a fair value gap, then yeah, sure. And if you think that much movement is reasonable, but personally, I would say, look, just be consistent, okay? Don't even worry about that. Leave the TP where it is. Also, be careful of the slippage. Half a pip or a full pip sometimes. It might not fill your order in, so try to put it a bit higher as well, or lower if you're longing. And the last 2 bullet points. So, how long to leave the trade? Because of course, another big thing is a major area to improve is fire and forget. Once you enter a trade, it's a done deal. If it's a trade in London where a session transition has just occurred, you gotta leave it for 2 hours. What does that mean? So 12 is New York start. So till 11, you can't touch that. You just gotta literally just put all the alerts, turn the screen off, go for a walk, come back, and note down the result of that trade, the outcome. Boom, that's it. That's all you're doing. You have no control. You've got all the control before you take the trade. You have no control. You accept the risk, okay? And finally, to our model, you could still do a really, really well done, basically, performance with that. You just need to let the winners run, basically. Take their sweet time, as the statistics will only work out in your favor if you let the trades take their course, okay? Micromanagement, again, I warn against that. So leave them be, to till the next element of time. Put your alerts on. I'm not, telling you off or anything. Alerts are fine. That's what they're for, okay? And obviously, alerts, if, of course, you basically just leave these trades on till the next session, okay, or next time. And then if, let's say, you've been taken out, then you decide, and of course, most of the work is already done before you've entered, to say, okay, well, this could be right, yes, but should I be taken out? What am I going to do next? Am I going to go the other direction, or am I just going to go neutral? Because that will help you to immediately, should it go the other direction, get in sync with that instead of be like, oh, what should I do? See? So all of those things, key points consider. And of course, patience. Don't do anything irrelevant. Focus, basically. Record. Wake up on time. Don't, um, think too much, overthink or anything like that. Just take it easy. Like you have been. Last week, I think performance-wise, I think you've done really well. So just keep that up. Basically, I think there's a really high chance we can have a good week. I'm hopeful. Inshallah. That'll be all.